Just a couple of months ago, Wall Street was terrified of two things: the relentless rise in long-term interest rates and, in a distant second place, the impact of these new GLP-1 diabetes and weight loss drugs from Novo Nordisk and Eli Lilly. These drugs didn't exactly come out of nowhere. We've certainly been covering them for a long time, and my charitable trust has a big position in Lilly for ages. But for whatever reason, this fall, the market finally decided we need to reckon with what it might mean for the future of the food industry. For those of you who actually haven't heard of Ozempic or Mounjaro, these drugs make you lose lots of weight, in part by eliminating cravings. Think of it like this. They take away the urge to eat junk food because it just doesn't taste all that compelling. You'd rather have an apple or an orange. 6 months ago, nobody cared about what that meant for the food industry, but this fall, investors collectively decided, wait a second, these GLP-1 drugs could be catastrophic for the processed food business. And not just food. Any business that benefits from high rates of diabetes or obesity, like a number of medical device makers. Really good companies. The severity of these sales was, frankly, astonishing. When you look at the packaged foods industry, the restaurant industry, the medical device industry, each of the three largest representatives in the S&P 500 plummeted by 15 to 30% from the July highs to the October lows. Those are stunning losses. And those are just the largest players in each space. We're talking about Mondelez, Oreos, Kraft Heinz, McDonald's, Abbott Labs. Many smaller and lower quality stocks in the same groups were hit even harder. The point is, all of these categories were wrecked by GLP-1 worries, and investors collectively jumped to the conclusion that entire industries were doomed in this new world of weight loss drugs. These stocks traded like people would stop eating food or no longer need medical procedures for complications from obesity. Ridiculous. Eventually, though, these things settled down. In October, everything rebounded along with the rest of the market. People aren't freaking out about this issue anymore, maybe because the backdrop for the stock market has become a lot more benign. Now, rather than the bad from the GLP-1s, I got an idea. I think we should start to appreciate the good, and that's what I want to go over. Because if you really believe tons of people take these weight loss medications to the point where it'll have a transformational impact on the economy, well, that's going to create a lot of winners, too. Naturally, that would be very good news for the companies that actually make these drugs, Novo Nordisk and Eli Lilly. Nobody ever got hurt by restating the obvious. Granted, both stocks have already run a great deal, but I think they have more room to run because these GLP-1 drugs are miraculous. I think they're the biggest drugs in history. Right now, they're being studied for a bunch of other indications: heart disease, kidney disease, even heavy drinking. As we get more positive data on the new class of medications, the insurance companies are more likely to pay for them, which is really important because these GLP-1 injections are incredibly expensive without insurance. And for now, Novo Nordisk and Lilly pretty much own the entire space. Sure, other drug companies are always working on their own rival therapies. Who could avoid this category? But it's easier said than done. Last Friday, Pfizer said they're discontinuing their clinical trials on their lead GLP-1 pipeline candidate. It was a pill rather than injection. People like pills a lot more than injections because so many patients dropped out of the study because of side effects. But how about we get more creative? Let's look for some lesser-known GLP-1 plays that can work. Regular viewers know that I have suddenly turned and liked Tyson Foods, the leading meat producer, even though the latest quarter was grim with a tepid outlook. Why? In large part because these GLP-1 drugs don't just make you lose fat. There's a side effect that make you also lose muscle. They take down everything. So whenever a doctor prescribes one, they tell you to eat way more protein. And protein is Tyson's proverbial bread and butter. This morning, the Wall Street Journal published a piece talking about how companies like Nestle and Abbott Labs has been hurt a lot by this, are looking to take advantage of the GLP-1 craze through the sale of another thing, protein shakes. That's another part of Abbott's business, or similar food products with added protein. Remember, Tyson's better, though. I think it's a sound decision. I say don't get cute. Stick with the original source of protein, meat companies like Tyson. Chicken's got protein, too, not as much. If you can't bring yourself to bet on a historic level loser like Tyson, and it is a historic loser, I got another one. Protein-focused food company Hormel, which, like Tyson, had a weak quarter last week, but historically it's been a better operator. Yet these drugs will make you lose weight even if you subsist on an all-spam diet. Now, we stumbled on another company with a big GLP-1 opportunity on Friday. When we spoke with Bob Pragada, he's the CEO of Jacobs Solutions, letter J, which is an engineering and construction company. I've been recommending us to play on infrastructure spending, something that really hasn't kind of let's say it hasn't panned out yet, as I hoped, even as it's got more complicated. With Jacobs spinning off its government services business through a complicated and expensive reverse Morris Trust transaction, suffice it to say it's going to go into two different groups. We learned something interesting in that interview, though. See, Jacobs helps design the advanced manufacturing facilities that pharmaceutical companies will use to produce all of these GLP-1 shots. We know that Novo Nordisk and Eli Lilly are investing billions of dollars to scale up manufacturing to meet demand of their GLP-1 drugs. And it turns out that Jacobs is getting some of that business, both domestically and overseas. Bragada told us that his life sciences unit is already growing at a double-digit clip, and within 12 to 18 months, new GLP-1 production will account for 30 to 40% of that entire import division. Finally, there's one more group of stocks that could stand to benefit from the rise of GLP-1s, and that's the apparel space. This is actually something we heard a couple of months ago from Chip Bergh, the CEO of Levi's, who said that significant weight loss would lead to people buying entire new wardrobes because the old stuff doesn't fit anymore. Similar to what happened when people gained or lost lots of weight during the pandemic. Either weight gain from being stuck indoors or weight loss from getting sick. Listen to this.
One of the things that did drive the category kind of coming out of the pandemic was about 40% of consumers had a waist change. Some people went up, some people went down, but that definitely drove it. Waist size change always drives new closet, right? And so definitely helped.
Maybe nobody caught that comment at the time because Levi's reported a mixed quarter. And yes, it cut its forecast. But I hope someone picked up on it because the stock's now up 19% since the interview. It's taken some time, but more and more people seem to be picking up on this idea. Last week, Stifel analyst Jim Duffy published the results of his U.S. consumer survey, which showed that 15% of respondents are currently on a GLP-1 drug, with another 21% reporting that they'd be interested in using a GLP-1 drug if the FDA approved it for weight loss. The drug had proven results, and it became widely available. All that has to happen. And if that's the case, he's betting apparel gets a big bump from people who actually need new clothes that fit. Hey, by the way, when it comes to apparel, I like Ralph Lauren and then PVH, both of which reported excellent quarters not long ago. Here's the bottom line. When the market was ugly, everyone was worried about how much money the food companies would lose from these GLP-1 weight loss drugs. Now that the market's much more optimistic, we're focused on potential winners from the same story. You can buy the drug makers. You can look for protein plays like Tyson Food or Hormel. You can bet directly on engineering firms like Jacobs. Or maybe the mass weight loss story makes you a lot more bullish on apparel. Take your pick. Let's go to Bill in Massachusetts. Bill.
Mr. Cramer, club member, doing the homework. I love the club, having a great time making money.
Yes, I love it. Thank you so much for those kind comments. I love it. Let's go to work.
Happy holidays to you and your staff, your family, everybody.
Thank
you so much, Jim. Thank you. I have a question about TJX versus Costco. When is it just simply evaluations? Is it timing? Is it the CEO's earnings, market size, evaluation at that time? How would you pick? And if you would say to invest $1,000 into the two retailers, because I'm looking for retailers right now, which one would you put it 50-50 or stronger to one side?
Well, Bill, I got to tell you, I would do 50-50 because Costco is really a club membership story, and TJX is about off-price. They have the most off-price they've ever had. They've got quality stuff. I check it all the time, but Costco's terrific, too. Let's split them in half, and thank you for the kind comments, for understanding what the investing club really does, which is teach. It's the only club in the world about stocks, and it teaches, and that's what I'm proud of. Thank you. Jim in Florida.
Jim, long-time listener. First-time caller.
Okay, let's go to work, Jim.
All over the place with news. What's your take on Nike, and why is it being deemed a defensive pick?
Well, it's not defensive with me. It's discretionary spend. Now, here's what I know about Nike. Two things. One, it's a great American company. And two, I just listened to Foot Locker, which had a better than expected quarter. And Nike sales are great there. I actually believe that Nike sales are holding up in China. And I think the stock represents good value considering the historical nature of how well it's done. Thank you for the call. Now, there's a lot of potential winners from the GLP-1 story. You could consider buying the drug makers, protein plays, engineering plays, or even apparel makers. I say take your pick. Now, there's much more Mad Money ahead. A Marvell CEO blamed the weak environment for the company's revenue decline. But does the chipmaker see any improvement in the near future? I'm finding out more with the CEO. Tough story to understand. Then lots of investors like to blame the shorts when their favorite stock underperform. I got a different perspective on this unique class of stock pickers. I'm telling you what it is. And all your calls rapid fire in tonight's edition of the Lightning Round. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.